Okay, listen up. It's January 2026. Gold just tapped $4,960 an ounce. Silver is absolutely flirting with $100, and you've got exactly 500 bucks to invest. And here's the brutal truth. 2 years ago, back in 2024, $500 was actually a decent entry point into precious metals. You could grab a quarter ounce of gold if you timed it right, or you could build a pretty solid stack of silver. But today, right now, in this insane market, $500 puts you in what I'm calling the danger zone. And if you walk into a coin shop and just ask for $500 worth of gold without knowing what you're doing, the dealer is going to sell you one of the worst investments in the entire precious metals market. And you're going to walk out thinking you made a smart move when really you just got completely played. So in this video, I'm showing you exactly how to survive the 2026 bull market on a tight budget. We're looking at the actual math, breaking down the premiums that are destroying people right now, and I'm telling you the one specific thing you should buy if you only have $500, because the difference between the right choice and the wrong choice could literally mean doubling your money or losing 30% before you even leave the store. First, let's talk reality. It's late January, the Federal Reserve is meeting in 4 days, markets are pricing in a potential rate cut, and that's why we're seeing this vertical move in metals. Gold is effectively at $5,000 an ounce, trading at $49.65 right now, but with premiums and dealer markups, it's a $5,000 metal. So what does that mean for you? Well, a 1-ounce gold eagle costs roughly $5,300 at a coin shop. A half ounce is $2,700, a quarter ounce is $1,400, all completely out of reach if you only have $500. Which brings us to the trap catching new investors right now, the 1/10 ounce gold eagle, the so-called beginner's gold coin. Mathematically, this tiny coin should cost about $496 based on spot price. Seems perfect for a $500 budget, right? Wrong, because everyone with a small budget got priced out of bigger coins, so demand for these fractional pieces exploded, and premiums are sitting at 25%, which means you're actually paying $620. You're short by $120. You can't afford it, so the dealer offers you the only gold option left, the 1-gram gold bar. And listen carefully, do not buy this. Seriously, a 1-gram bar contains roughly $160 worth of actual gold, but they sell for $250 to $300 each because of packaging and manufacturing costs. That's nearly an 80% premium, which means gold would have to climb to $9,000 an ounce just for you to break even. With a $500 budget, gold is officially off the table. It's a wealth trap. Accept it and move on. So that leaves us with silver. And I know what you're thinking. Silver's at $97 an ounce. I missed the boat. It was $30 2 years ago. And yes, you missed cheap silver. I won't sugarcoat that. But here's what matters. Look at the gold to silver ratio. Back in 2024, it was 85 to 1. Today, it's compressed to 50 to 1, which means silver is outperforming gold. It's catching up. And Bank of America just forecast a potential blow-off top of $135 per ounce later this year. So at $97, yeah, silver is expensive compared to history, but unlike gold, it's still buyable with $500. You can still get real weight in your hands, and that's the entire point. Now you've got $500. Here are your 3 options ranked from good to best. Option 3, the numismatic trap. Do not buy American silver eagles right now. I love them, they're beautiful and recognizable, but dealers are charging numismatic prices. A single 2026 silver eagle trades for $125. So with $500, you only get 4 coins. That's 4 ounces of silver. You're paying $30 per ounce over spot just for that eagle design. You're paying for brand, not metal. And in a bull market, you want maximum metal. Option 2, the stacker bar. Go for a 5-ounce silver bar. Spot price for 5 ounces is roughly $485. With a low premium generic bar, you can get this for exactly $500 to $510. This is the most weight-efficient option. 1 bar, easy to store, easy to verify, and easy to sell later. You're getting 5 full ounces with minimal premium waste. It's solid, but there's something better. Option 1, the absolute best buy for 2026 with $500. Junk silver, constitutional silver. These are dimes and quarters minted before 1965, when U.S. coins contained 90% actual silver. And here's why this is brilliant. When silver spot price is high, like now at $97, serious investors prefer 100-ounce bars. They want bulk, so they ignore small coins, which means you can find coin shots selling junk silver at spot or even below melt value because they have too much inventory. With $500, you can buy roughly $15 face value of these coins. And here's the magic. That contains about 10.7 ounces of actual silver. Compare that to Silver Eagles, where you got 4 ounces. With junk silver, you're getting nearly 11 ounces. Same price, more than double the silver content. Nobody can tell me that's not a better deal. Here's the strategy. If you've got $5,000, buy a 1-ounce gold buffalo. You're in a great position. But if you only have $500, forget gold completely. Don't let FOMO trick you into buying 1-gram gold bars at 80% premiums. That's financial self-destruction. Instead, walk into the coin shop, ignore the shiny display case, and ask for the junk bin. Ask for pre-1964 quarters and dimes. Buy as many as your $500 will cover. Because the market is volatile, we could see silver pull back to $84 next week, and if it does, you buy more. But if Bank of America is right and we hit $135 by summer, your $500 stack could be worth $700 quickly. That's a 40% return in 6 months with physical security. This isn't about getting rich quick. It's about protecting purchasing power and positioning intelligently in a market that's already run hard. $500 won't make you wealthy, but deployed correctly, it's the foundation of something bigger. And the difference between smart money and dumb money is understanding premiums, understanding liquidity, and understanding what you're actually buying. When you buy that 1-gram gold bar at 80% premium, you're donating to the dealer's profit. But when you buy junk silver at spot, you're converting every dollar into actual metal. That's how you build wealth. That's how you survive a bull market without getting destroyed by fees. One more critical thing. Do not overthink this. Analysis paralysis destroys more investors than bad decisions. I see people waiting months for the perfect entry, waiting for silver to drop to 70, waiting for gold to crash to 4,000, and the market keeps climbing. Suddenly, silver's at $110 and they're still waiting. So here's my advice. If you have $500 now and believe in precious metals long-term, which you should because central banks are buying gold at record levels, currency debasement is accelerating, geopolitical tensions are rising, then deploy that money this week. Don't wait for perfection. Buy the junk silver, store it safely, and stop checking prices daily. Because the real value isn't day-to-day fluctuation. It's the insurance policy against systemic risk, against currency collapse, against financial instability. You can't price that security. So what are you buying in 2026? Are you still stacking, holding, or selling into this rally? Let me know in comments because I'm posting an emergency update Tuesday after the Fed announces rates. That could move markets violently either direction, so you'll want my immediate analysis. But until then, remember, $500 in the right asset beats $5,000 in the wrong one. Premiums matter, weight matters, and junk silver is your best friend in 2026. Now go make the smart move.